Now, the last thing I want to close out on, just to really put a pin on this whole concept of the reaccumulation period. When we look at something called relative unrealized loss, so this here is looking at the number of coins, the number of BTC in profit or loss. This one here is looking at the percent of all supply in profit or in loss. This one here is basically looking at how much of the market cap is held in a loss, right? So it's basically, you've got a market cap, some of the coins are in profit, some are in loss. What's the proportion of market cap in loss? Now, what you'll see is that during the primary bear market, that explodes higher, right? In all these previous cycles, you get this very sharp uptick. Notice how brutal. Here in 2018, we sold off by 50%, and look how much of the market cap exploded into a loss. So that shows you lots of coins, lots and lots of coins were acquired at 6K, and then bang, they all fell into a loss very, very quickly, right? 2021, we started to really see this as we broke down through the cycle floor. 30K, we break below the cycle floor, and bang, massive, violent, a huge amount of supply suddenly finds itself in a loss. Again, that cycle floor is where people think the bear market bottom is, but it ain't the bottom. It goes one step below, or in our case, 2 steps. Now, interestingly, once that floor gets put in, a whole bunch of supply gets capitulated, reaccumulated, and suddenly there's coins with a lower cost basis. So when price goes higher, you get an equally powerful recovery. Let's go back to that second price chart. That big V-shaped recovery from the bear market rallies, it's putting stacks of supply back into a profit. That is telling you how much supply got accumulated below us. It's telling you about the supply and demand balance, and that there's a bunch of people who are now in the green and sitting on a much healthier cost basis than where they were previously. Generally speaking, that's what you see towards late stage bear markets. So we have had, 2023 has essentially driven us back down to our current level, right? We've seen that reversion of all of that pain that happened near the bottom. Now, what you'll also see is that we chop sideways and kind of hover below this. We've still got loss in the system. The bull market is where there's no loss because we're literally punching new all-time highs every day. So in bull markets, there's very, very little red. But this kind of chopping around in between phase is what we call the reaccumulation period. We're not quite out of the woods. It's still going up and down. You get ups, downs. It's volatile. It's chaotic. On a macro scale, it kind of goes sideways. 2019 was a unique case where we actually traded back down to 3,800 during the COVID sell-off, but previous cycles have tended to have a gradual, slow upward drift. It's boring, it's sideways, it's grindy, but it does have a general upwards drift, and it typically straddles that halving event. So 2019 was a bit of an outlier, and of course, it remains to be seen what this current cycle looks like. And strangely enough, if you can believe it, our current level, when we look at the amount of market cap held in a loss, our current level is at 55%, meaning that 55% of all history has had a worse loss, and 55% of history has had 45 has had a superior position. So again, equilibrium, we're kind of in the middle of everything. There's just, it is literally in the balance point, right? If you put Bitcoin on a fulcrum, we're pretty much sitting on the exact balance point, and there's no weight in either direction. So it's kind of interesting how these things play out cycle after cycle.